In trading places, the Pacer ETF investment company had the pleasure of ringing the closing bell this week at Cboe Global Markets. Joining us now with an ETF update is Sean O'Hara, president of Pacer ETFs. Good to have you here. What are some of the latest trends in the ETF industry? How's it going?
ETFs continue to take in money. I think this year probably will be another record year. I think it's due to a number of factors, cost being part of it. I think the active mutual fund industry has now finally figured out that the ETF wrapper may make more sense for investors. There's lots of different strategies available. So overall, the industry is doing very well. And at Pacer ETFs, we are on track to have one of our best years ever in terms of net new flows.
Are there any new interesting trends that you can share with us?
I think there always are. We like to do things in silos. So we have a dividend strategy we call the dividend multiplier that provides 4 times the dividend of the S&P 500. We're getting ready to launch a NASDAQ 100 version of that. And we have just recently launched a growth series of ETFs to go with our value series. Our value series uses free cash flow yield. On the growth side, we use free cash flow margin. And so we're really excited about that.
What's your outlook for the stock market for the next 3 to 6 months as AI has been leading the charge?
Well, I would say this to investors. Number one is this is a highly concentrated market. Basically, 5 to 7 names are driving all the return, and they also have, the vast majority of the weight in these broad indexes. And so I think investors need to think carefully about just buying broad-based index-based ETFs like the S&P 500 or the NASDAQ 100 because there's such a concentration there and we don't have as much diversification in those types of strategies that we used to. I think eventually, what's going on now will change. It never lasts forever when we have this narrow market leadership. And I think investors should start to think about what it looks like when this period we're going through sort of changes into a new period. And I guess the tagline for that is that cap weighting is not necessarily going to be the best place to be if we go back to a more distributed market as far as returns and weights.
Thank you for your update.
Thank you.
Go to businessfirstam.com for where to see our show on TV.